Hello, welcome to another live broadcast of Master Investors Company. Glad to be here again on another video, coming to you live from the studio here in Miami. And we're going to be speaking about the cash flow quadrant. We're going to give you some tips and knowledge about financial literacy and how we can actually take ourselves to the next level financially. Here at Master Investor, we're more than an investment management company. We founded the company because we love to invest, and in order to reach great wealth, we gotta master the ability to raise capital and to use OPM, other people's money, and OPT, other people's time, to ultimately break free from the rat race to reach financial freedom. And financial independence or financial freedom is reached when we actually exceed our income with active cash flow and assets, meaning that they're producing and generating passive income, and that amount exceeds the expenses, the living expenses that we have every month. So we have to understand what is our pinpoint when it comes down to our living expenses. And throughout my studies, I have found out that everybody's living expense is different. So somebody that feels rich or wealthy with a $10,000 cash flow income from passive income, it may be different from someone that needs or wants a living standard of $100,000 per month. But both are possible regardless of which level or amount of living expenses you need. It does not matter. The fundamentals and the basics apply the same way to both individuals. So a person that feels rich with $10,000 passive income versus a person that feels rich with $100,000 income takes the same energy, takes the same amount of thought to be able to put together a healthy asset column that produces that type of passive income. So the end game and the holy grail is to build our asset column. So Master Investor not only is an investment management company, we also have a financial department, because we understood that the more we give, the more we get back. We also are huge in financial literacy, and so we created this financial department to provide high quality financial education made simple to the community, to the world, to anyone that wants to become partner of Master Investors Company and start bringing that Master Investor out of you, out of the inside of us. Because at the end of the day, when we look at our life, we're gonna have to play with money to the end of our lives. So in other words, we're going to have to exchange money for food. We're gonna have to go and maybe get a home or buy a car or get a credit card or use credit. Anything that we do in this life involves money. Just about everything, because money answers all things. It's a tool, and we have to go back to the history of money. I always love to go back to it because we understand it better. We can actually use it better as a tool. And if you think of it as a tool, an idea backed up by confidence, then you're gonna have a better chance to making a successful business, to creating passive income. Because it comes down to passive income. It's about the three types of income that exist in the money game. The first one is ordinary income. About 90% of the population, that is what they know how to make. They know how to go to work and create ordinary income, which is when you have a job and you exchange your time for money, or you work on a commission-based type job. Maybe you're a salesperson, or maybe you have a private practice if you're a doctor or a dentist and you have to show up to work to see clients every day. So understand that it's just the type of income, it's ordinary income. So the next type of income that we have is portfolio income. And a lot of those people end up getting into portfolio income at some point because they have some money accumulated to invest or give away to invest in mutual funds and invest in stocks, and they're not really investing, they're trading. They're hoping that the market goes up. And here at Master Investor, we're giving you the tools that makes us ultra wealthy, the tools that really work in all economies. So it's not so much about predicting the market, what we teach here at Master Investors Company. We actually teach you and show you how to be prepared for any type of market, because an inside investor is someone that knows how to read financial statements, someone that knows how to put a deal together, how to build a brand, knows the 8 elements of the successful business. And we have a triangle that we go by, the business and investor triangle, that we use to build our company. And any big company out there is built with these 8 elements that are found in this amazing triangle that we talk about all the time here at Master Investor. So if you want to learn more about how to make money from home, how to create your passive income, because at the end of the day, it's all about learning how to build our asset column with cash flowing assets. There's a formula that we use for the velocity of money, and that goes like this. Number 1 is to use the money that we have, hopefully it's debt, because debt is tax-free, because debt is created. Money is created with debt. After 1971, 72, President Nixon separated the gold from the dollar. So from that point on, money became monopoly money, became an idea, became a currency, fiat. And so the government, the Federal Reserve Bank, began to print money more and more. And today we are over $17 trillion in debt. So think about that for a second. If the government is printing money, then why people are saving money? If they can print money, then you and I can legally print money. And so here at Master Investors Company, we teach you and show you how to do just that, how to print money from thin air. But the first thing we gotta understand is that money is an idea backed up by confidence, because a lot of people still think money as something physical. And yes, money is, a paper note. We have it, and if you look at it, it says it's a note. So there's nothing backing this money. Yeah, we see it here as maybe something material, but money is nothing when it's in my pocket like that. And when it's sitting on a table or sitting on the mattress, money goes back to its intrinsic value, which is 0. Every currency always goes back to its intrinsic value, which is 0. So you have to understand that money after 1972 became an idea backed up by confidence. Is fiat, is fake money. So how do we get rich with fake money? Well, number 1 of the formula is to use the money, and hopefully we're going to the bank and telling the bank, hey, we need a loan because we would like to acquire this asset, and it looks good in your books, it looks good in my books, it's creating cash flow today, we're going to manage it better. This is how the cash flow analysis look like for the past 10 years. This is our team that we're putting in. As soon as we take over, we have experienced people in place. We have a tenant. We have a contract for the next 10 years. And by these changes that we're going to make, we're going to increase the bottom line over $1,000 on each unit every single month. So the bank is going to love that, because it stops looking at us. It starts looking at the investment itself. So the bigger the investment is that we bring to the bank, and the better team we have around that investment, then the easier the bank is going to become our partner, is going to give us the loan that we need so that we can manage and control that investment. So number 1 is to use other people's money, right? And if we have money sitting around, then go to the bank, open up a bank account, and get a credit card against that money. So you don't kill your money first, you use the bank's money. And then from that point on, what you do is you use that money to acquire an asset, a cash flowing asset. You don't invest it into the stock market, because investing in the stock market is not really investing, it's gambling and it's trading. If somebody's going into the market to hope and pray that the market's going to go up, then that is trading, and you pay a higher you pay a higher percentage on taxes, which ultimately taxes is the number one expense that we all have, is the highest expense, the number one, the top. So if we can minimize taxes by playing on the right side of the quadrant, of the cash flow quadrant, then we are going to already be wealthy right from the beginning, because we're minimizing taxes, which is the number one expense, the highest expense that everyone has in their lifetime. So when we look at money, and we understand that money is an idea because of 1972's change of law, the new rules of money emerge. Money is fiat, money is fake. So we, the rich, got richer by using fake money, if you will, and we use it and we acquire cash flow and assets, something that has value, that's creating cash flow, that is providing a service or a product to the marketplace, is solving a need in the marketplace. And every time we build a company, we have to understand that we're doing so because we want to solve a problem in the marketplace. A company is always built for that reason. So, and excuse me, we gotta understand that we must also invest with our own company. In other words, our own company, our own entity buys our other investments. So step number one of the 5 steps of the velocity of money formula is that number one, we use other people's money to acquire an asset. We use our money to go and get a loan, and then we use that credit because why? Because debt is tax free. So when we use debt, we pay 0 in taxes. We don't pay any taxes on debt because money is created with debt. After 1972, that's how the economy is created. That's how money is created, because there's nothing backing the dollar, because the gold was separated. Why was the gold separated, you may ask? Well, the number one reason was because we were importing more than exporting as a nation here in the United States. Therefore, if gold is attached to the money, to our dollar, and we're importing more and we're buying goods from other countries, then we're given our most precious metal, which is gold. So President Nixon had to do something drastically because we were giving out our gold to other countries. So that's not a good idea. It's not a good move. It's not intelligent to do that. So he had to separate it. And then in 1974, we signed a petrodollar agreement with Saudi Arabia, basically saying that every nation around the world must exchange their currency into dollars when they purchase oil. And so that puts the dollar back on its place, number one, and all of the other currencies follow underneath, because who doesn't need oil? The world, entire world needs oil. So the dollar's back up, but it's losing value every day. The gold's going up. And so maybe it's a good idea to invest in gold. I don't know, you ask yourself, because at the end of the day, it's about thinking for you. It's about you becoming a great investor. It's not the investment, if it's great, is are you a good investor? And so here at Master Investor, we want to wake you up in regards to the financial principles that work in all economies, giving you the tools that we use to create true wealth, which is not measuring dollars, measuring time. How much freedom do we have if we stop doing whatever we're doing? Do we have assets that are producing passive income? And can we survive? Can we thrive the same way without doing anything? And that's when we determine whether we truly have an asset, because an asset, in simple terms, puts money on our pocket. A liability takes money out of our pocket. Make sure you subscribe to the channel if you're watching this live. If you have any questions, drop them on the chat box. I'm gonna go back and we're gonna be answering any questions. And check out our digital courses at www.masterinvestor.education. And thank you for forming part of Master Investor community. You can find us on all platforms at Master Investor, and we're going to be giving you more knowledge, more tools that can help you create a business, and that business will buy other businesses, and you will be able to live your dreams because you're not longer working for money. However, we're not saying that working for money or being an employee is bad, because here at Master Investor, we love great employees. If you are great at something, we're gonna hire you to do that type of job. So we're gonna need employees at the end of the day, because we cannot do it all. And here at Master Investor, on the right side of the quadrant, when we play on the right side of the quadrant, we have to learn how to delegate and how to acquire a great team of specialists that do great work for us. So number 2 of the 5 steps formula, once we use, number 1 is use the money that we have to acquire a cash flowing asset, whether that's a home, whether that is a company that we establish. And hopefully when we acquire the home, we don't acquire it under our name. We have to establish a company. So the first thing you should do is to grab that money and open up a company, establish yourself with an entity. So right from the beginning, you are legally learning how to play with the laws of the wealthy, because the laws in the tax code, when we do it through a business, benefits us, the entrepreneurs and investors, and is actually, funny enough, against the employees and self-employees. Even though they work for money and they break their back 40 to 60, 80 hours per week, and we on the right side of the quadrant do not work for money. We have a system, but we do create jobs, and we give those people jobs. And so we create opportunity, and we are producers more than consumers. We're solving a problem in the marketplace, and maybe so that's why the government gives us tax breaks. And the law is basically a package of incentives for entrepreneurs and investors. So we have to get a legal attorney, a lawyer that can help us strategize and protect our assets, choosing the right entity, choosing the right state to incorporate. From that point, what we want to do is then start building our asset column. So if we have the money to acquire the home, we use the credit, we go and put the down payment, we get the 90% or 80% loan from the bank, and then we get the other 20% from our credit card. So we pay, zero out of our pocket. We're using 100% finance. Then we acquire that home. We turn it into an Airbnb just to keep things simple. And that home now brings 4 times more than the mortgage. And so now is a cash flowing asset because it's going up in value. And even if it goes down in value because the market crashes, people still need to rent. And if we do it to cater the tourists in a great city, then we're going to have a cash flowing asset year in and year out. It's never going to stop creating cash flow for us. Even when we're sleeping, people are leaving the place, we send the cleaning crew in on autopilot. Everything is on autopilot. The platform at Airbnb send us all the clients, we get great reviews, and then we can get a second home. Once second step is accomplished, then we can move to the number 3. But the second step is recoup our money back as soon as possible. Whatever we invested, so if the bank gives us 80% for the mortgage, for the loan, then we gotta put down the 20%. We go to our bank, that money that we had under the mattress or that money that we had saved up, we use that money to print more money from the bank by saying, hey, we need a credit card against our money. So if we have 50,000, then the bank is going to say, here's a credit card 50,000. We can see that you have a debit card of you have 50,000 on your debit card account, and so we're going to give you 50,000. With that 50,000, with that credit card, we go to the real estate agent. We give them the 20% down on the home, we acquired the home and now it's 100% financed. Now our job is to acquire that 50,000 back as soon as possible. And so it may take us 6 months, it may take us a year, but once that is accomplished, then we move to number 3, which is to keep control over the asset, which we will. If we do it right and we do it under our entity, then we still have control over the home because we have a mortgage of 30 years. And so we got our $50,000 back. We can go back to the bank and say, hey, here's the money back. We need another loan. Now we have 100,000 because we still had the 50,000 that we put there that was under our mattress. We still got the 50,000. We got the 50,000 back from the bank for the credit card that we got from them. And then now we can actually ask them for 100,000. Now we got 200,000. And then we still have control over the asset. That's number 3. Keep control over the asset. It's all about control and leverage when it comes down to building wealth. Number 4 is that the money that we have recouped back, we will use to acquire another cash flowing asset, to put a down payment on another asset, whether it's a digital asset, whether it's a real estate property, whether it's a bigger property, not a home, maybe a duplex, maybe a fourplex, maybe a plaza, or maybe an office building, etc. So that's number 4, is to use the money that we recoup and the money that is being generated from the asset that we had acquired, and that is free money. We're actually getting wealthy with fake money, because first, money after 1972 became fiat money, became fake. And so if we learn how to use debt, because we don't pay taxes on debt, and we're using fake money because there's nothing backing the dollar. There's nothing backing that money that we see when we have it cash. So we have to treat debt like cash, and we have to understand that we don't pay taxes on debt, and because money is created with debt. And so why did President Nixon separated the gold from the dollar? Because we were importing more than exporting, so we were giving our gold to other countries, and we were losing a precious metal, which is gold. We don't want to lose our gold. We don't want to give it out. Okay, so once we understood that we are a very much country that likes to consume other goods from other places, then from that point, President Nixon decided to go ahead and separate the gold from the dollar. So that's a very important year to understand, because from that point on, the new rules on money emerge. And the rule number 1 of our company is that we do not work for money. We work to acquire assets. We work to make money work hard for us. And so how do we do that? By having a system of systems that are doing the selling and telling for us, that is constantly providing a service or a product to the marketplace. And so what's step number 5? Once we acquired another asset, from a step number 4, which is using our money that we recoup and using the generated cash flow from the active asset that is producing more and more money to us in the form of passive income, aka cash flow, then we're going to do number 5, which is repeat the formula 1 through 4, and then we will find ourselves very wealthy. And that's how we truly create true wealth. So there are 4 types of people in the cash flow quadrant. 2 categories, left side and the right side. On the left side, they play by a different set of rules, and the laws are basically against them because they pay the highest in taxes, and they don't have very much room to minimize taxes. On the right side of the quadrant, on the other hand, we entrepreneurs and investors, we can use the tax code and the laws, the corporate law, to our favor, because we are doing basically what the government wants us to do, which is create jobs, invest in technology, invest in food, and we are investing in the things that they want us to invest so that the economy grows. And so, and in the holy grail is to use debt, other people's money, because we don't have to pay taxes on debt. So there are 2 types of debt, good debt and bad debt. Good debt goes hand to hand with an asset. It produces money and it gets paid on its own. A liability, on the other hand, goes hand to hand with bad debt. If it takes money out of our pocket, we have to pay that debt back with our own sweat and hours of exchange at a job to work for that paycheck to pay that debt, then that's bad debt because it's not producing money and it's being paid with our own money. Good debt gets paid with other people's money legally. And so the first thing you should do if you're watching this is to open up a company. Think of a name that is not your name, and then think of maybe 10 things that you want to do. Think maybe 5 things that you're passionate about, that you see a problem in the marketplace and you would like to fill that in. And you could have competition left and right. It doesn't matter. If you can do a little better than they are, then clients are going to find your company to do business with you. But the first thing you got to do is establish your company. That's why our course number 1 at our website, where you can find all our digital products at www.masterinvestor.education, is to start a company, and it teaches you exactly what to do, where to go to start a company, how to delegate that, and how to have all the legalities in order to start making a brand, to start making a company, so that you can keep it, to pass it down generations, and to build your wealth through that. Because ultimately, we the rich, we buy our investments through our business. In other words, we have a business that's producing cash flow. That business has a financial statement. It has an asset column, it has a liability column, it has an income column, and it has an expense column, just like you and I have a financial statement. And so that business, the more assets we have on the asset column, the more cash flow we generate, the more confidence the bank has with us to give us more money in the form of a loan or a credit line, so that we can acquire more assets, whether it's the same type of asset or we going to go into a different investment category, whether it's a plaza or an office building or whatever that may be, even a digital asset. Maybe we're creating digital products that are giving great information organized. And there's a new book coming out from our company. It's called How to Create Cash Flow from the Internet, and subtitle Turn Passive Income On. We're excited to present that this month. Stay tuned. And back to the cash flow quadrant. 2 types of categories: the left side of the quadrant and the right side of the quadrant. On the right side of the quadrant, we pay less in taxes because we have an entity. Okay, we do things with a company. And so that's a step number 1 that I would suggest you to do if you're watching this, is that you incorporate with a company. Okay, that will be a wealth worth investment for you and your family and your future, to start doing business with a company and go open up. Once you have the company EIN number and you have it legally established, and you go and open up a bank account. And you don't need much capital to have a bank account open under that business. So from that point on, the focus will be to build the asset column of that business. So think of your passions, think of the things you want to solve in the marketplace, write them down, make a business plan. I'm going to also invite you to our website, subscribe to a newsletter. And on the left side of the quadrant, we're going to find that there are 4 types of people in the money game. On the left side of the quadrant, you'll find the E's and the S. The E's are on the top left, the S on the bottom left. The E stands for employee, and they work for money, they trade time for money. That's where active income is made, which is ordinary income. Is the type of income that you exchange your time for money. 90% of the population, that's what they know how to do, because they've been taught that. And we weren't taught in school to think as an entrepreneur and an investor, which are found on the right side of the quadrant. The S stands for solo or self-employed, and that is that type of individual that has a degree, or maybe in medicine, or maybe she or he is a dentist and has his own practice, a private practice, and he has to or she has to show up to work to see the clients. And that type of person likes to do everything themselves. They like to be the best at their company. They're at the top of their company and they have to show up. They maybe hire a few people here and there, but they like to be hands-on, and they barely have any systems. They're part of the system, okay, of their company. So they basically own their job. The employees work for somebody, works for the system, and the S's, the self-employed, have and own their own job, but they are the system. On the right side of the quadrant, we find the business owners, the B's, and the I's, the inside investor. And the inside investor is someone that knows how to read financial statements, someone that understands financial literacy, someone that invests in financial education, someone that understands how to raise capital, how not to use our own money, how to use other people's money, how to use other people's time legally, and how to make that profitable, how to create cash flow from thin air, how to invent money from thin air. That is the best type of investor. There are 5 types of investors that I'm going to explain in more detail in a different video. And but what you need to understand is that here at Master Investor, we encourage you to become an inside investor, because that's the type of investor that does not need money to create money. Okay, so, and a business owner is someone that has and owns a company or companies, and we learn how to use systems, because a successful business is a system of systems, and we do not have to be part of the system to generate the passive income. So on the right side of the quadrant, if we do not work physically, we still get paid. On the left side of the quadrant, if the individual does not work, then she does or he does not get paid. And so different worlds, different values, different characteristics, the fundamentals are different. And so the question is, if you're not happy with your job, if you want something more, then I encourage you to start investing in your financial education. Head over to our website at www.masterinvestor.education and invest in a digital course. And you will be able to use that into your advantage as an asset for you, because it's going to help you create a passive income. And the first thing we gotta start changing is our core values. We have to change our personality and the view we have about money. That's the best way I can put it in order for somebody to go from the left side of the quadrant to the right side of the quadrant. But the first thing you need to understand, which side of the quadrant are you on and where do you want to be? And so we're not saying that the left side of the quadrant is bad or the right side of the quadrant is better than the left. We're just saying how the money game is played in the real world and give you an insight so that you can see where you are. And if you like to make a change, then you can do so by following the formulas of Ask the Rich and showing you exactly the steps that you need to take, which is changing inside of you first, and then understanding that money is fake, that money is fiat, that money is an idea backed up by confidence, that there are 2 types of debt, bad debt and good debt. So we, the rich, we like to be in debt. We like to actually be in good debt. We are always looking to use other people's money legally so that we can multiply. So we know how to put a business together. We know about marketing, because the number 1 job of an entrepreneur is to raise capital, and the number 1 ability is to sell, because when we combine those together, then we can raise any type of money from private investors, from friends and families, from banks, and from our customers. Okay, so I hope that this live video has become of value to you. If you have watched this, thank you for your time. Subscribe to the channel, give us a like, and find us on all platforms at Master Investor. Listen to our podcast at Master Investor. Look for the logo. New merch is coming out, new book on the way, and leave us a comment. I'll see you on the next live video. Take care. Bye for now. Oh.